It's Thursday, November 13th at 7:37. So let's jump into it. So starting off on the hourly, I saw that we were kind of in a bearish trend. You can see we had these lower highs, right? Lower highs. Again, a lower high and a lower high. So immediately I can just see that we're in a downtrend. And so what I did was I marked the nearest highs on the hourly and on the 15. And so dropping down into this sort of section of the chart, I again marked the nearest highs to work with. This one does not really matter all too much, but I just had it there. So now we're just kind of working with this zone right here. Next thing I did was found this gap right here. This gap is also a 1 hour gap. You can see right here, it's a huge 1 hour gap. But it's also on the 5 and the 15 minute. So on the 15 minute and 5 minute, we have this gap right here. So I marked out the internal low, the most like common low. Took this one, and so I just dragged it across, which is also kind of like the midpoint of the gap. So I took that, took this high, and there's a 5 minute gap right here. So I marked all those out just for reading the chart. And I also saw we had this little 15-minute gap over here with it coincides with this retest, internal low, and a couple different internal lows. So coming into market open, we have 5:30, 5:45, 6, 6:45. All right, on the 5 minute, so as price was trading into the open, we created a 5 minute gap right here. I believe this candle's like 28 points or something. 39.5 points, which is basically 40 points. And I look for a 5 minute candle to be 40 points or more. So I went ahead and marked this one out and continued on. So we have this 1 minute gap that price created at 6:05. You can see right here. So price came down, tested the 15-minute gap, came back up, rejected and retested the gap, tried to break through, and then broke below into market open. I got faked out on this right here. I went short as price was breaking below and then came back up. I got out because there was this gap right here. Price was pushing up. I got out because I was already in pretty bad drawdown. I think it was like $1,500. So I was like, nah, I ain't doing that. So also it was before market opened. So I just called it. Waited for market open right here. Price shot below the 15-minute gap and broke below previous low. Created an SMT right here. Boom, boom. And we put in a lower high. Boom, boom. So that made me want to go short. So I went short off the break of the gap, targeted the internal lows. Like these lows right here. We had this low, this section right here, and the low created at NWOG. So I just went short right here and targeted these kind of areas. Turning on my chart executions, we can see on a smaller time frame. So there's the 15, here's the short, and then I got out for a loss right here, 15.15, and then here's the short I went as price broke below, right? I went in 30 and then got out down here. I wonder if you can see better on the 30-second. Yeah. All right. Went short, got out for a loss, went 30 right here, and then got out right here. was like, all right, price is still wanting to go lower because it couldn't break above this line. So I went short again, got out down here. I was like, all right, maybe I can just do one more little quick trade, but I really didn't need to, but I just took one little more and I was done. And so I did trade with heavy size today, 3 minis or 30 micros as it shows. Probably did not need to trade with all of these contracts, but it is what it is. Came out with 3,000 per account up here at the top. So I'm copy trading 2 accounts, so that's $6,000 on the day. And if we take a look back on the 5-minute chart, and I'll turn these off. Back on the 5-minute, you can see that price came back, retested the 1 minute, and now broke below again. But that's pretty much it. Just wait for a break. Read the market, waited for price to break the 15-minute gap and the 1 minute, targeted the lows, and got out. So if you have any questions, comments, or you just want to like the video, much appreciated, and I'll catch you in the next one. Deuces.